Good evening everybody and welcome back to episode 139 of Enter Crypto, where twice a day I keep you informed and fully up to date on all things crypto. If that sounds like something you'd be interested in, then subscribe to my channel. I put out a new video every 12 hours. So the story I've got for you today is from Barron's, and it's from their cryptocurrency section, and it's titled Coinbase and others are set for a Gamestop moment in crypto stock short squeeze. And this is by Jack Denton. Now, just a quick introduction to what GameStop, the GameStop moment in a crypto short squeeze is. So basically, I think it was 2021, and there was basically a really sort of crappy company that wasn't doing very well called GameStop in the US, and everybody could see that it wasn't doing well, and especially when COVID came out, they just got even worse for them. And what the institutions started doing, the big hedge funds and folks like that, decided that they were going to short this stock into oblivion and heavily short sell it, which is basically to put a bet on that you think it's going to continue to go down. And some people are even saying that GameStop were going to go to zero and blah blah blah. Now, that's all well and good if the stock does continue to go down and it just looks bad, because they'd looked into it that the management was bad, it was a failing company, there was no demand for the product. It just looked terrible on paper, and so a lot of people in the institutional side of things saw that as a huge opportunity to make kind of easy money, basically. And what happened is that there was a guy, and he set up kind of a subreddit for people to come to, and it was called Wall Street Bets, I think I remember his name was. And what he would do, or what he organised, was for everybody, just average people like me and you, to go and buy some GameStop stock, this company's stock, just a little bit. But if he realised that if he did enough of it, it wouldn't take much buying pressure for it to force those institutions and liquidate, force them to sell, force them to buy in this case, and they would have to, it would basically put a collapse on their positions, and it would make the stock rise, and this would then knock out the next leverage trades, and so they would then have to buy, and it would have a cascading effect just by them sort of initially lighting the touch paper, if you will, and they could create and make huge profits off the back of these hedge funds. And that's not known as a short squeeze. It's kind of a short squeeze. It's not just a crypto thing. It's to do with anything stocks. It can be anything actually, anything that's traded internationally. And it's where basically you see large sell orders where people are shorting it, or institutions are shorting it, and before it gets, whilst that position's on, you can use some of your capital, and you don't need much to just start a domino effect, and it's this, this sort of snowball, and you can just get some momentum going, and then it just takes off from there because they're over leveraged. They've put too much down, and you can take advantage of that as somebody, small player. And so that's what this kind of saying on this instance, that we've got Coinbase, which is a crypto company, a crypto exchange for sort of newbies and retail basically, to come in and buy some Bitcoin. They do charge quite heavy fees actually for doing that, but I think they're quite well liked in the crypto, even though they do charge high fees, because it's a really good gateway into crypto. It gives normies, normal people, access to buying some Bitcoin. So let's see what it's got to talk about. Barron's are quite a sophisticated website actually. I like them. So there is a short squeeze going on in beaten down stocks across the cryptocurrency sector. All it takes is a quick look at the likes of Coinbase Global, Silvergate Capital, to see that GameStop style dynamics are at work. Crypto broker Coinbase spiked 24% on Thursday, bringing its gains across the past 5 days to 54%, and its year-to-date rise above 140%. Crypto banker Silvergate jumped 29% on Thursday and is up 60% since the end of last week. Other stocks exposed to digital assets such as Bitcoin miner Riot Platforms and MicroStrategy, a software group with huge crypto holdings, show similar price action. While these stocks have all fallen on the Friday pre-market, the dynamics that caused the eye-popping moves remain intact. Sure, the stock market is on a roll. The S&P 500 has marched more than 3% higher since last Friday, with the Nasdaq filled with high growth stocks like those in crypto, which is climbing 6.4%. But the largest digital asset, Bitcoin, which has a lot of influence on sentiment for crypto stocks, is little changed across the same period. What investors are seeing is likely a short squeeze, a technical market factor that was behind the incredible rallies in meme stocks popular among retail traders in 2021, including Gamestop, AMC and Bed Bath & Beyond. It has to do with betting against stocks, or shorting. In order to bet against or short a stock, investors have to borrow the underlying shares and then sell them, wagering that they can be repurchased at a lower price. The trade involves pocketing the difference between the price at which the shares were borrowed and the price at which they were returned. If the bet goes wrong, however, and the price rises, investors can come under pressure and some may opt to repurchase and return the shares at a higher price, covering their position and taking a loss. Pressure can be particularly pronounced if the trade was made with margin or money borrowed from a broker. That's basically leveraging. If shorting is a crowded trade, then investors can end up clamouring to buy up the same shares, squeezing prices higher. Shorting crypto stocks is a very, very crowded trade, and that's understandable. Crypto prices have collapsed since their November 2021 high, with a spate of bankruptcies and high-profile fraud allegations rocking the digital asset industry, raising the prospect of existential threats from regulation and wary investors. But now what once seemed like a smart trade looks dangerous, short squeezes can be unpredictable, and investors would be right to exhibit caution. The extent of the short squeeze risk is remarkable. Among US stocks, the average short interest, the percentage of a company's shares sold short, is 4.9%. According to financial data group S3 Partners, Coinbase has short interest of more than 25%. An astonishing 75% of Silvergate shares are being shorted. Short interest at both Riot and MicroStrategy is in the double digits. As these stocks get squeezed, the pain for short sellers is ratcheting up. Those betting against Coinbase, Silvergate, Riot and MicroStrategy lost more than $730 million on a mark-to-market basis in Thursday trading alone, according to S3. Mark-to-market losses for traders shorting these four stocks exceeds $2.5 billion in 2023. Because of these mark-to-market losses, these stocks are highly squeezable, says Ihor Dusanivsky, a managing director at S3. I'm looking for the short squeeze in these stocks to push stock prices higher, and there is reason to believe the ride will only get bumpier. Short sellers have yet to meaningfully cover their positions, meaning that the squeeze has the potential to be accelerating, sending prices even higher if the pain becomes too much. Surprisingly, even with these stocks rallying, we have not seen massive short covering yet, Dusanivsky said, but we expect this to change as large mark-to-market losses in 2023 will start to squeeze shorts out of their positions. But on the other hand, this doesn't mean that going long on Coinbase or Silvergate is a good idea. Short squeezes can peter out and flip just as fast as they started. These stocks have gained because of unpredictable technical, not fundamental factors. The same can be true in reverse. And that's quite a good article actually. I enjoyed that. And another thing to point out that usually short squeezes happen in low liquidity markets, so it would be very difficult to do the same thing in something like the gold market because it's so liquid. There's such a huge amount of money transfer. So you to influence that market, you would need billions and billions, if not trillions. Gold's a $11 trillion market, so to make that move in any direction your way, you would need a ridiculous amount of money. And the same for the US stocks, which is even bigger. So you really need, that's why Gamestop, because it was such a small little company, it didn't take much movement for it to start going wild with the short squeeze. And it's the same with crypto, because there's not much money in crypto. When you compare it to all the other financial sectors, it doesn't take much again for it to be influenced. And so there can be a lot of opportunities in that for you as an individual investor actually. So a great little article there. That's what I've got for you today. Remember everybody to please subscribe to my channel. Thank you for watching. Thank you for listening. join my team and I'll keep you updated on all things crypto every 12 hours. Don't forget to smash the like button if you feel you got value from this video, and I'll see you all in 12 hours time.